it's working now. Joe, good to see you. Evening, how you doing? Have you been a busy or relaxing week ahead? Do I have a busy or relaxing week ahead? I would have to say busy week ahead. Mike, good to see you, brother. How you doing? Joe, how's your weekend going to be? Busy or relaxing? Good evening, Miles of CMF. Bullock Soppy, good to see you. How you doing? Hello, Miles of CMF. Comatose, good to see you. How you doing? How you been? Okay, let me pin the live show. Pin the profile. Yes, pin. Okay, there we go. How was your day? It was busy. It was very busy. And this whole week has been, exceptionally busy, to be fairly honest. With helping out my business partner move apartments, to my own work and some other works that are going on. It was hectic, too much happening. Even on the weekend, I don't think I'll be resting. I'm seeing my business partner over the weekend, probably to help him out more regarding him moving apartments. And also I'll be seeing my other friend, essentially, who just recently opened up a bar, a calf bar, essentially. I'll be seeing him. It's going to be a busy weekend. Now, hi Miles, how's things? Autistic, good to see you. How you doing? Hi Miles, CMF family, how you doing today? Carlos, good to see you. How you doing? Okay, let's do intro, disclaimer, what we're going to talk about on tonight's live show. Now, essentially, everyone should be tuned in for the first part. Welcome to the CMF Live. If you're watching this for the first time ever, the CMF stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m., long time onwards, for the most recent news regarding cryptocurrency, CBDCs, AI, politics, regulations, all the information you should know about regarding the world completely transforming into a digital space. The disclaimer of this live, as always, is not financial advice, not political advice, and whatever I say is only for entertainment purposes. And also, we do Q&As in this live as well, which means if you do have any questions, put it down in the comment section. More than happy to help you out. By the way, thank you so much to everybody who has already smashed the like buttons and the retweet buttons if you're watching this on X. And thank you so much to everyone who's also watching on YouTube right now, who's also smashed the like button and for putting comments outside the live. CMF members, if you haven't already liked or retweeted this live and you're watching this on X, drop a like, drop a retweet. If you're watching this on YouTube, just drop a like. Now, on tonight's show, we're going to be talking, by the way, this is episode 415 of the CMF Live Show. And on tonight's episode, we're going to be talking about a mixture of news. We're going to be talking about essentially just some BRICS news, which we haven't talked about BRICS for a while now, but we're going to go through some BRICS news on tonight's live. We're going to go through some perspective news of where the market's going to be going. We're going to talk about CBDCs and stablecoins on tonight's live show as well. We're also going to be talking about Bank of America on tonight's live show, some perspectives happening there. Bitwise CIO perspectives coming out, prediction markets on terms of are we going to get rate cuts are coming out. Some other news to essentially follow through from Canada. There's a bit of international news coming out in terms of the crypto space. And obviously some Ripple news to go from tonight's live show. Is also institutional essentially news to go from tonight's live show. Now, the first news we are going to be covering on tonight's live is regarding BRICS. But before we talk about BRICS, let's go inside the comment section first. Let's see what's happening there, and then we'll go straight into the first news. Good evening, Miles. How you doing? I'm doing great. Callie, good to see you as well. How you been? Good evening, all. JP, good to see you as well, brother. How you doing? And the first news on tonight's live is regarding BRICS. We haven't talked about BRICS in a while, but the only reason we'll talk about now is because a perspective has came out on BRICS. And it's coming essentially from it's coming from Robert, essentially the same man that, is behind the whole Rich Dad Poor Dad. And, well, here's some predictions. So Robert essentially is predicting hyperinflation in terms of BRICS, essentially gold, currency threatens USD dominance, and Bitcoin in focus. So Robert has sparked another wave of debate across the financial world, essentially after commenting on the reports that BRICS nations, Brazil, Russia, India, China, and South Africa, are preparing a new gold-backed currency called UNIT. So this is the most recent update we have, if Robert is correct, that the BRICS currency is going to be called UNIT. In his tweet, he called the announcement a major threat to the US dollars and warned that essentially savers holding cash could be wiped out by hyperinflation. Robert's message was blunt. My forecast is savers of the US dollars are the biggest losers. If you own US dollars, hyperinflation may wipe you out. As usual, he essentially retreated his long-running essentially mantra to hold gold, to hold silver, Bitcoin, and Ethereum instead of relying on fiat money. Robert's argument essentially centers around the idea that global trust in the US dollars is weakening, and that essentially gold-backed BRICS currencies could accelerate that decline. His thinking essentially is simple. If major economics begin to essentially transact in stablecoin assets backed by gold, then essentially demand for the US dollars could fall sharply. In theory, that reduces dollars global essentially influence and could increase inflation at home, especially if the US continues printing money at historical levels. Okay, I'll be very honest. There is one major thing that essentially Robert has missed out. And I don't know if Robert has missed out on purpose from his tweets, or essentially he just maybe forgot, but he is an intelligent man. So if I had to take a guess, he might have just missed it out on purpose because he wants to make his point sound strong and clickbait. And if he pointed out, what he missed out, it wouldn't have the same impact on his tweet, which is that regarding stablecoins, Robert's suggesting stablecoins will be completely taking over. The US dollars is going to be going to zero. Everybody run towards gold. BRICS currencies are coming out. That's going to damage the US dollars even more, which is stablecoins. Essentially what backs stablecoins is fiat. US dollars back RLUSD, back Tether, back essentially USDC, back PYUSD, back FTXUSD, and the list goes on. Not the entirety of the asset, but some portion essentially of USDT, USDC, RLUSD, FUSD, PYUSD, the list goes on. Out of the 20 to 50 to 100 stablecoins out there, all US dollar stablecoins, they're all backed by fiat USD. They're also essentially backed by bonds, which again makes the US dollars even stronger. And every time these stablecoins print more tokens, they're backing their assets with the exact same thing. So every time stablecoins print, US dollars technically should get stronger as we go along. Not overnight, but will get stronger as we go along. And I don't know why Robert decided to not include that in his tweet. I'm guessing it wouldn't have the same impact of fear and clickbait if he mentioned, oh, also regarding all the stable US dollar coins, they keep on printing. They're going to be backing it by fiat. So does fiat really go to zero if essentially stable coins, essentially growth is happening and they're backed by fiat, they're backed by US bonds, which again increases the essentially the liquidity essentially of essentially US dollars. So I don't know why Robert decided to miss this out, because he is an intelligent man. So did he miss it out because he forgot, or did he miss it out because it wouldn't have the same impact on his tweet? Now, he also essentially has been quite vocal for years about the dangers of fiat systems. And I fully understand that regarding the dangers of fiat, and there's too much printing going on. Completely understand that. In his views, the US is spending far beyond its means, running essentially record deficits and relying on the Federal Reserve to artificially support the economy. A competing essentially gold currency, global currency, backed by hard assets would highlight the weakness of fiat-based models. That I completely agree with and I understand. Robert also forming Bitcoin and Ethereum as the life rafts essentially fits his long-term position. Bitcoin offers a capped supply and a decentralized network beyond essentially government inflation policies, but is highly volatile, doesn't react the way it's supposed to. Ethereum offers an entirely new financial layer essentially built on smart contracts. For someone essentially who believes fiat is doomed and inflation is unavoidable, crypto is a logical hedge, especially in a world where large economic blocks and experiments with essentially alternative currencies. That doesn't mean that essentially a BRICS unit would automatically make Bitcoin surge or instantly weaken the US dollars. But it does highlight a broader trend in terms of global finance, essentially in the fragmentation. More countries want alternatives to the US dominated systems, and private digital currencies like Bitcoin stand to benefit from that shift. Robert's tone essentially is dramatic, and that's nothing new. Still, behind the dramatics lies essentially a real conversation. The US dollar is facing more serious competitors than essentially ever before. Whether the BRICS unit becomes a true challenger or not, the move signals that the world is actively seeking alternatives. And in the kind of an environment, assets like gold, Bitcoin, Ethereum, or cryptocurrencies in general naturally become a part of the long-term conversation. If the BRICS plan evolves into essentially a functioning settlement system backed by real gold reserves, it could mark the beginning of the slow but meaningful shift away from USD essentially dominance. But for now, it's more of a warning shot than a replacement. Okay. Robert's essentially, tweet was very dramatic, to be fairly honest, and it did shake some grounds inside the crypto space, you could say, regarding him suggesting that dollars is going to go to zero. It's just never going to happen. Him also suggesting that essentially going towards BRICSing, essentially stable coins, cryptocurrency, whatever, it's going to weaken the US dollars. That's just not how it works. Stable coins actually, in fact, US dollar stable coins strengthen the US dollars. And I don't know, again, why he missed that out on his tweet. Probably won't have the same impact, I'm guessing. But also, regarding what he said, one main point he made, which I agree with, which is countries are looking for other alternatives, whether BRICS unit happens or doesn't happen, but countries are looking for alternative payment systems. That I agree with 100%. But what I want to say is that countries are trying to look for an alternative, not to the US dollars, just to the US dollars, but they're actually looking for an alternative to SWIFT, is what I want to say. Countries are not just looking as an alternative to US dollars, but they're actually looking at an alternative to SWIFT, because SWIFT is the key player that goes around and sanctions countries and damages countries economically. So I think they're more likely looking at an alternative for SWIFT than just replacing the US dollars, because the main problem isn't the US dollars, it's SWIFT. Now, moving on essentially from what he had to say to stablecoins, ironically, is next what we're going to talk about, and CBDCs. Before we talk about that, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or comments, go for inside the comment section. More than happy to help you out. So let's see where we're at inside the comment section and go straight into the next news. We were at, okay, let me see where we're at. We were at here. Hello, our CMF members. Scott, good to see you all, brother. How you doing? Share the live. Let's go, Scott. I have a chilled out weekend ahead. I hope I haven't jinxed myself now. Good evening, Miles and CMF. Good to see you all, free forever. How you doing? Hi, Miles. How's my friend? Hope you're fine. I will send you a message on Telegram. Can you please give me your Telegram? Ah, yes, Carl. And did you miss it? I'll send it to you after the live. No problem. Hi, Miles. I was talking to my phone, wishing you well, and hope you had a good weekend. I can't see it in the chat, so I'm duplicating it. But thank you for giving such great information. Thank you so much, Adi, for the kind words. No problem. Anytime. Good to see you as well. Hi, Miles and CMF. Stormy, good to see you as well. How you doing? Russia and India today made a deal about India to buy gas from Russia despite Trump tariffs to India. Well, India just made a very, very bad move, to be fairly honest. Hi, Miles. Why is so much essentially dump in the crypto? It's not much. It's not just about the dumps. It's about the manipulation that's going on. Look like no signal of a bull run. It's still in the works. Ripple and XRP are taking over. Facts. Let's go, JP. Now, CBDCs, stablecoins. So there's a debate going on right now from the former Google executive. And essentially, the former Google executive is coming out saying, stablecoins versus CBDCs. Stablecoins seems much more of a viable option than CBDCs because of too much government control. And well, let's just go through it. Graham Cook, former Google executive and Bravo Finance CEO, declares essentially US free market stablecoin policy superior over centralized European CBDC models in recent comments. Cook's insights essentially suggest US stablecoin regulations promotes competition and in terms of essentially innovation, challenging Europe's centralized approach and impacting global digital currency dynamics. Graham Cook, former Google lead essentially and CEO of Bravo Finance, endorses the US as the free open market compared to other essentially market spaces around the world that are heavily focused on CBDCs. Graham emphasized the US is essentially dollar-backed stablecoin underpinned by the new federal legislations. This provides a competitive advantage against Europe's CBDC, which is managed essentially centrally by the European Central Bank. The decentralized essentially nature offers market benefits, and the US regulatory framework enables the dollar-backed stablecoins to thrive and essentially creating a favorable environment for fintech growth. The regulatory clarity inside the US aids stablecoins in gaining market share with implementations of financial systems adopting blockchain. The competitive landscape essentially favors public blockchains, contrasting with Europe's top essentially down model, limiting diverse issue opportunities, and Cook's insights suggest a superior market trajectory for regulated US stablecoins over Europe's digital euro. Okay, I don't know what it is today. I don't know if today is the leave out information, essentially news day, because this is the second essentially attempt of someone leaving out, critical information. Again, I'm guessing because they couldn't make the same impact with their speeches. Regarding essentially the former executive of Google, with his speech of how Europe and everybody else is in CBDCs, the US is not in CBDCs, and the US is only on stable coins. Yeah, that's a lie. The US is also in CBDCs as well. And there are more evidence on that if you just go to the International Monetary Fund, or just go to the Bank of International Settlements, or even just go to the CBDC Foundation, you could see progresses of CBDCs of certain countries. Now, moving on essentially from what he had to say, and blatant lie. I don't know why essentially today is the day that everybody's just chosen to leave information from their tweets or announcements. But moving on from that to Bank of America, essentially, is what we talk about next on tonight's live. Everyone is expecting a 25 basis point interest rate cut, but investors' expectations could change quickly despite cautious, essentially theoretic from policymakers. Bank of America analyst essentially warned in his latest note. We wouldn't be surprised if markets start pricing essentially in the prospects of a January cut more aggressively in the near term. If the market starts pricing in essentially a rate cut, then the market won't react when the rate cut happens. The opposite essentially will happen. He also said essentially that the bank's US economic essentially weekly reports, markets have largely priced in a 25 basis point rate cut happening at the December meeting. The Bank of America essentially also stated that the Fed will take this essentially step in December, reminding the central bank that it had already essentially signaled a 25 basis point cut. However, analysts said that this cut would be supported essentially by firmer communication that they could essentially expect a hawkish tone shift in the forward guidance in their statements. Bank of America predicts that there could be 3 dissenting votes at the essentially December meeting that's going to be happening. It also predicts that the economic projections will see upward revisions to 2025 to 2026 growth estimates, slightly upward revisions to the unemployment rate, and downward revisions to inflation coming out. These adjustments are expected to help the Fed to justify its December cut rate. According to the bank's forecast, the median dot plot will also essentially point out 2 interest rate cuts for 2026, followed by long pauses. The Bank of America essentially, however, believes Fed Chairman Jerome Powell may struggle to prevent the market from pricing in further easing. Given the volume of data due to before the January meeting, we believe it will be difficult for Powell essentially to remain convincingly hawkish at his press conference, the bank noted. Also, essentially, they noted that Powell could try essentially to emphasize the need for a significant weakening in employment data to justify further rate cuts, or even argue that the policy rate is not truly essentially restrictive in the 3.5 essentially to 3.75% range. However, despite all of this, the bank believes that markets will continue to focus heavily on upcoming essentially economic data, and the analyst also noted that Powell cannot avoid data essentially dependency, adding that the markets are ready to react quickly to newly reacted indicators, and this could pave the way for more aggressive pricing in interest rate cuts expectations as we approach the January meeting. So we're essentially expecting a rate cut in December, is what's being suggested from Bank of America. We're also expecting multiple rate cuts to be happening in 2026, again, according to Bank of America. And if they are priced in, then the market won't react the way it's supposed to, which is a positive manner, the crypto market space. So let's see how that one plays out. Now, moving on from Bank of America's perspective to Bitwise's perspective. Before we go through the Bitwise news, let's go inside the comment section first. As I said previously, this is live, which means if you do have any questions or comments, go through inside the comment section. So let's see what's happening inside the comment section first, and then we go straight to the next news. So let's see where we're at. We were at here, I think. I sent you a message today via the Tube and X Scott. I'll check it after the live show. Hashtag XRP, let's go Scott. I've been dollar cost averaging XRP. Glad to. Let's go Miles. Let's go Scott. I'll check it after the live. I'm gonna check out Carlos's message after the live as well. Now, Bitwise. Bitwise's CIO Matt Hugan says that essentially strategy has no need to sell Bitcoin despite the market stress. There's a situation going on right now around MicroStrategy, or strategy in other words, which is essentially that Strategy is on the verge of selling its bitcoins, is what the rumor that's being spread around right now. And the rumor could possibly be coming from JP Morgan, because they're the ones that had their essentially foot on Strategy's neck and tried to squeeze them out. Also trying to remove Strategy from the indices. That's not going to be working out for them well either. But, in January, we'll find out more about that when essentially the sit down happens. But yeah, there's a rumor going around that Strategy might be struggling essentially and will have to sell. But Strategy themselves claim that they're perfectly fine for, as long as they can. Now, Bitwise's CIO has came out essentially against the rumors and pretty much said that Strategy isn't struggling and can withstand everything that's thrown at them. There are many concerns essentially across the crypto markets, yet Strategy selling its Bitcoin is not one of them. Bitwise CIO Matt Hugin said the company has no need to liquidate its holdings in any sort of manner, even with market stress and index essential review pressures shaping the current narrative. Matt Hugin stated that Strategy does not face any essential situations that would force it to sell its Bitcoin. His memo essentially said fears of forced liquidations do not match the company's financial conditions. And he also added that the current stress comes from index reviews and discussions and general essentially market weakness. Moreover, essentially MSCI essentially signaled the Strategy could face removal from its essentially investable indexes. The provider essentially said that crypto treasury firms will essentially resemble holding companies rather than operating firms. And Strategy essentially disagreed with that viewpoint and pointed out its software division and financial structure around Bitcoin. He can also explain that the MSCI essentially final decision will depend on its methodology. He also referenced essentially estimates showing index-linked funds may need to sell up essentially to $2.8 billion in Strategy stock if removal occurs. Even so, he noted that the past index events produced smaller market reactions than expected, as seen essentially during Strategy's Nasdaq 100 inclusion. He also said that the recent price essentially pressure may already reflect these expectations, and he also added that Strategy stock often follows broader market directions and Bitcoin price trends essentially rather than index flows alone. Hugin also addressed concerns that Strategy may need to liquidate Bitcoin to manage debt. He said the company holds $1.4 billion in cash, which covers interest payments for about 18 months. He added that the major debt does not mature until 2027, which removes the near-term essentially pressure. Furthermore, Strategy also holds $60 billion in Bitcoin reserves that trades above its average acquisition cost, which is good news. Hugin also said that the past essentially drawdowns never pushed the company to essentially sell, even during essentially deeper stress in 2022. He also noted that the voting structure gives Michael Saylor strong control and reducing the chance of forced changes. He added that his memo that the current fears rely on incorrect assumptions about cash flow and Bitcoin trades also essentially near-term well above Strategy's long-term cost basis. He also said the firm has enough runway to maintain its approach going forward despite volatility, showing that Strategy selling Bitcoin is not a concern today. Bitwise CIO coming essentially forward, reassuring everyone that MicroStrategy is not struggling. They're not going to be selling their Bitcoins anytime soon. They might somewhere down the road, but that won't be anytime soon in any sort of way. So there shouldn't be any sort of impacts or drastic, essentially downward trends on the market space of fears that Strategy is getting ready to sell its Bitcoin, according to the Bitwise CIO Matt Hugin. Now, moving on, essentially from Bitwise's CIO Matt Hugin to Bank of Canada. And the National Bank of Canada has done something quite interesting, which is also relatable to what Bitwise's CIO has just said, which is Strategy is perfectly fine, their stocks are perfectly fine, nothing bad is happening. The National Bank of Canada has just acquired a major stake in MicroStrategy. This is one of the most oddest news you could pretty much say, because Canada, they have been moving at a snail's pace entering the crypto space in terms of creating regulations at least, but this is a big step. The National Bank of Canada, essentially the National Bank of Canada, has reportedly purchased 1.47 million MicroStrategy essentially shares, valued at $273 million, as disclosed essentially by the Bitcoin Treasury. This move essentially could indicate further institutional interest in Bitcoin exposure through equities and potentially influencing market perceptions of Bitcoin-linked assets. Market observers have noted a potential spike in interest in equities tied closely to Bitcoin's performance, while key industry leaders have yet to make broader statements, and the speculation among financial analysts also suggests a ripple effect across essentially similar investment avenues. Regulatory essentially bodies might review such trends, although no immediate legislative changes are forecasted. In the dynamic cryptocurrency market, Bitcoin delivers essentially a footstep essentially into a glimpse inside the crypto space, and the confidence essentially of what MicroStrategy brings towards the table, MicroStrategy brings towards the table, is what essentially drew the National Bank of Canada forward to go for their shares. Now, research teams also notes that potential shifts in institutional strategies forecasting greater equity-based exposure models emerging essentially within the financial sector, and data trends also essentially could lead to further innovations in how organizations approach cryptocurrency investments, blurring the lines between conventional and digital finance. So, Canada hasn't done much in terms of innovation inside the crypto sector, yet the National Bank of Canada has just purchased 1.47 million shares of MicroStrategy, which is equivalent to $237 million. So they see confidence in MicroStrategy, but not confident enough to bring out regulations for the crypto space. A bit of an odd maneuver, I would have to say. But it does show essentially they see the crypto space as a viable option. And interesting essentially that they're doing it in a month where, Bitcoin is on a downtrend. Now, moving on from the National Bank of Canada to WisdomTree. But before we talk about WisdomTree, let's go start the conversation first again, and then straight into the next news on tonight's live. Let's see where we're at inside the comment section. We are at here. I sent you a message. Let's go. Okay. Crypto is fiat currency. I don't know. Crypto is fiat currency. Crypto is backed by fiat in some sense, you could say, in terms of stable coins. But no. Hi, Pisces. Good to see you. So how you do? If you want, you can elaborate on that. Even Manny, even in miles of CMF, Manny, good to see you. So how you do? If you want, you can elaborate on that one. Dorf Cloaks, if you want, you can elaborate on that one. Now, WisdomTree. WisdomTree launches Europe's first fully stacked, essentially, Ethereum ETP on Lido. So WisdomTree essentially is launching ETFs and ETPs essentially in the European market space, which again, will bring liquidity towards the table, not overnight, but over time. And it is essentially just showing again that the crypto space is absolutely maturing in front of everybody's eyes, which is a good sign. So List is now trading on the Deutsches Börse, essentially six Swiss exchange, and Euronext Paris and Amsterdam, according to WisdomTree. The essentially product provides investors access to Ethereum essentially staking rewards through a regulated essentially ETP. The ETP holds essentially ST essentially ETH, the liquid essentially staking token issued by Lido protocol that represents staked Ethereum. The product is physically backed and essentially meaning every unit of the ETP corresponds directly to the underlying essentially ST ETH, with essentially no non-staking essentially buffers for deposits or redemptions, according to the company. List launched it with essentially approximately $50 million in initial essentially capital and applies a 0.50% essentially management fee. WisdomTree essentially stated to everybody. Staked Ethereum essentially is the liquid token of representing Ethereum deposits via Lido, the largest staking essentially provider on the Ethereum network. Lido also enables users to stake ETH without essentially traditional lockup periods or withdrawal delays by issuing a liquid token. Rewards essentially are added through rebasing essentially mechanisms, which increases token balances over time. Lido currently accounts for nearly 1/4 of all staked Ethereum, according to the network data. The product also carries risk, including potential price dips essentially between ST ETH and ETH during volatile market periods, smart contracts, risk from essentially Lido protocol, and general cryptocurrency market volatility. All the things that you should consider before going for an ETP staked Ethereum on Lido. According to Wisdom Tree's disclosures, the company has essentially indicated the product is designed for informed and experienced essentially investors. The launch essentially represents continued integration of decentralized staking mechanisms with regulated financial infrastructure in European markets. And in September, Wisdom Tree launched that private credit fund on the blockchain with a $25 essentially minimum investment fee. So, Wisdom Tree expanding itself inside the European market space, offering staked Ethereum on Lido. If you're somebody that is holding essentially Lido, it's good news for you in the long term, not overnight, but long term is good news for you. And in terms of essentially the expanding into the European market space, once again, it's brilliant to hear. Honestly, we're in a market space where the crypto market space is not doing too well for itself, but there's so much happening in terms of the institutional sector entering the crypto space or expanding into the crypto space further and beyond, essentially. Now, private credit is what we're going to talk about next on tonight's live. Moving away from Wisdom Tree, essentially expanding into the European market space, which is a bullish sign. But again, the market's not going to be showing that in terms of price action because it's heavily manipulated. So, private credits essentially may inject more risk inside the crypto space, essentially is what's being suggested right now. Private credit is the most active category for on-chain tokenized assets. Recent bankruptcies and value write-offs in private credit are causing concerns about the crypto space and the usage of tokenized loans. Apparently, the biggest issue inside the crypto space right now are people taking out loans and putting it inside the crypto space, which is actually makes the crypto space volatile because then those loans have to obviously be paid off, and bankruptcies sometimes happen when things don't play out. Private credit is one of the fastest growing categories in traditional finance, which has crossed essentially over into the crypto space now. Private credit is estimated to grow to $2.6 trillion by 2029, according to Morgan Stanley. Others put the industry size at $3 trillion already towards the end of 2025. Private credit essentially invited extra scrutiny after U.S. Senator essentially Elizabeth Warren urged for more oversight of the sector. The call for essentially for investigation arrived after the recent implosion of essentially the Tricolor essential holdings and First Brands Group. The expansion essentially of private credit raised concerns of toxic, non-transparent risk, and tokenized private credit is still finding its way into the DeFi space. But it has shown how uncertain valuations of loans can affect crypto projects. Private credit essentially lumps together loans from multiple sources, according to real-world essentially assets.xyz. $2.1 billion in private credit has been tokenized, up from just essentially $49,000 at the end of 2024. The essentially rapid inflow of tokens based on private credit is raising questions about whether crypto finance can absorb the risk. Over $14 billion in private credit is already carried out by Figure, essentially Helco tokens. Although the asset is only traded on its internal networks, other tokenized essentially private loans tokens have also found their way inside the DeFi space. Tokenizing essentially a basket of loans further obscures the quality of assets and can threaten essentially the crypto protocols. Morph, one of the most essentially widely used lending protocols, has already gained a reputation for supporting risky vaults and allowing users generated caution. Essentially, most of the vaults have Morph use essentially crypto assets as collateral. Some specialized in vaults have essentially also started giving credits for packaged tokens and private loans. And essentially selected also essentially Medius users can borrow USDC against essentially M1 for essentially tokens, tapping around $2 billion in stablecoins. Now, there is only a few essentially DeFi spaces that are offering private essentially tokens to whoever wants to essentially borrow against the crypto space, wants to borrow against their crypto assets. There's a few DeFi spaces out there. One of them is Morph and so on. And they're essentially suggesting that private tokenized essentially loans are impacting the crypto space not in a good way, but a negative way, because too many loans are essentially pulled out and not enough are being paid back, and also it creates bankruptcy situations. It also could cause certain tokens to collapse depending on how much borrowed money is inside that token being pulled out all at once. Now, the problem essentially arrived when Fansera had to write off 2% of its essentially fund value to better reflect the valuation of the packaged loans. This affected the high-risk essentially Smokehouse USDC vault, curted essentially by Stakehouse Finance. The vault is still considered reasonably risky-free. Vault essentially currently carrying over $23 million in available liquidity. The smokehouse, essentially MF1 USDC vault, turned a year old today and has been healthy in terms of collateral liquidity. Only 36 wallets essentially hold these tokens based on the ether scan essentially data that was done today. Stakehouse essentially explained that a 2% drop in the collateral price was not a problem, especially given the much higher crypto volatility. And despite the low impact, startups like D2 Finance warned that tokenized private loans may not be suitable for crypto DeFi platforms. And D2 Finance also warned that OBEX about using real-world essentially asset collaterals in the Sky ecosystems. OBEX raised $37 million, aiming to turn it into essentially issuing real-world backed tokens and stablecoins, and so on. So there is something happening essentially inside the crypto space where parts of the DeFi space are coming together, creating essentially some sort of security private finance, essentially loan companies. And a lot of people are borrowing from them. I mean, according to Morgan Stanley, it's going to become a 2.5, 2.7, or according to other sources, it's going to become a $3 trillion industry in terms of people borrowing privately against their crypto projects, which in some cases has went pretty damn south. A lot of people went bankrupt for not being able to pay them off, and a lot of people had to pull their monies out that was used as collateral because essentially it was time for them to pay their loans back off, which caused certain crypto projects to collapse. Borrowed money should not go back into crypto, essentially is what's been suggested. I agree up to a certain extent. I definitely agree. You should never borrow and essentially buy any sort of assets, to be fairly honest, because anything can go possibly south. You should always use your own money. And the numbers that we're talking about on this scale is about, in the trillions they're borrowing and putting inside the crypto space and taking back out, which causes the market to keep on collapsing. So I agree with them. Now, moving on from essentially borrowed money into the crypto space back again to the former Signature essentially bank executives launching a blockchain bank. Before we talk about a blockchain bank launched by former executives of another bank, let's go inside the comment section first, and then we go straight to the next news. Miles, what is your opinion about silver assets? They said silver is doing better than gold and raised over 50% in 6 months. I agree. Silver essentially is now being seen as the golden goose. The same way gold a long time ago was seen as the golden goose, silver is now being seen as the golden goose, and they're telling everyone to stack up on silver. So putting the hype to one side, I do believe silver is undervalued and it should be valued at a much more higher rate. The silver double, essentially its price in 6 months, is about to close 50 euros, which again is very impressive. But I do believe silver is definitely undervalued and it should be higher price. Also, just want to point out that regarding my banker friend that essentially I sometimes talk about, and again, I'm not going to be mentioning which bank essentially he works for or which essentially position he holds inside the bank, because I don't want to put his job essentially in jeopardy, because sometimes we have conversations about the financial sector, and obviously he only feeds me information that essentially is obviously not insider trading in any sort of way. So we're having conversations about this thing that's happening in terms of precious metals, which is the same way they're able to produce diamonds in a lab, which essentially affected pricing when it came to diamonds. They're also getting very close to producing gold in a lab. Now, they haven't perfected it yet. So it's got to a stage where they are able to produce gold in a lab without digging it essentially on the ground, but essentially being able to produce gold in a lab. But they weren't able to essentially get the temperature right when essentially the level essentially of gold is supposed to be burning out. But anyways, they're getting very close to essentially producing gold in a lab. And the conversation we're having is, let's just say by some miracle, the same way they were able to, perfect producing diamonds in a lab, let's for example, let's say they perfected producing gold in a lab. What could possibly happen to the financial sector? Well, gold will pretty much just go from where it's standing now to the rest of the crypto market space might follow its footsteps, or it could be seen as an alternative, but it wouldn't be anytime soon, in my point of view, at all. Stock market will obviously get impacted as well in terms of precious metals companies, and silver might be seen as the key player in that scenario. in the long run, if they're able to produce gold in a lab, then silver might be seen as a much more viable option going forward, comparing it to gold. Again, they haven't been able to perfect it yet, but they're getting at stages, they're getting very close at. The same way they got essentially perfecting diamonds in a lab, they're getting very close to producing gold in a lab now. But yeah, regarding silver, definitely undervalued. Miles, did you know that over 2 million, essentially, over 2,600,000 French citizens left France between 2024 and 2025? I am French, and we have too much taxes there. Life is too hard and expensive. I agree. Regarding essentially life is too hard and life is expensive, I agree with that 1,000,000,000%. Also, regarding the amount of people that have left France is ridiculously high. And I understand if they're leaving essentially basis because life is not the way it's supposed to be. It's too expensive. It's not too safe, and so on. I fully understand that. I'm from the UK. London is not cheap to live in any sort of a way either. London is incredibly expensive to live in. Taxes are an absolute joke in London. You're literally, what's the word I could use that doesn't sound too, but it's just extremely high. Let's just say businesses are leaving essentially London. It's getting worse. Next year it's going to be worse in terms of taxes in the UK. It's absolutely ridiculous here. Also, the UK has the highest energy prices in the world, pretty much. The highest energy prices in all. I mean, it's ridiculous. So I fully understand you when you're saying essentially, taxes are too high in France and life is difficult and it's too expensive. Hey, trust me, I live in London, and London's not cheap. It's extremely expensive and extremely heavily taxed, and the highest energy costs in the world. I fully understand where you're coming from. Canadian government trying to keep the people inside the dark about digital assets. All my comments essentially off the live Canadian news channel commentary were deleted once I posted them, taking the CBDC. They said that they will only have wholesale CBDC, is not for consumers, which is a lie. I said, how can there be when globally CBDCs are being introduced? What can hold onto that stupid paper dollar, such as controlling essentially currencies? I agree 100%. Regarding the Canadian government lying, every government is lying to their citizens when they say they're not interested in CBDCs, or they're only bringing out wholesale CBDCs, not retail CBDCs. That's a complete lie. And they're suggesting it's because of privacy. That's why they're not releasing a retail CBDC, because they care about your privacy. I call BS on that. They couldn't care less about your privacy. They want to know more about your life. Every single day, every single second of the day, they want to know more about your life when it comes to the government. So the idea that the government is saying, no, we don't want retail CBDCs because of privacy of citizens, absolutely loaded BS. Maybe because of their own privacy, but they don't care about us, to be fairly honest. And regarding wholesale CBDCs, the only reason they're releasing wholesale CBDCs first is because they want everything around you to accept CBDCs, so that when retail CBDCs come out, you can actually use them. You see, China was the first country to essentially take footsteps inside a CBDC world, and also essentially take footsteps inside essentially the social in terms of social securities, or social essentially systems where you buy something is -1, buy something is +1, which we talked about in the past. And what I want to say is China made a mistake where they went straight for retail CBDC. And then China realized that there isn't much places people could spend their CBDC. And it's not the entire essential country of China using CBDCs. No, it is obviously spreading, but it's not the entire country yet. But China realized that introducing a retail CBDC was quite dumb, because everyone around them didn't really accept CBDCs. So the West took notice of that and decided to introduce wholesale CBDCs first. So every business around you will accept CBDCs, and then when retail CBDCs come out, you can actually spend them. China did the opposite. They released retail CBDCs first, and then they started going into essentially institutions accepting CBDCs, or businesses accepting CBDCs, so that people could spend their money. China did the other way around. The West took notice of that, and they're doing it the opposite way. So when countries come out and say, we're introducing wholesale CBDCs for now, Retail CBDCs later, when we figure out the privacy, they're lying to you. They want everybody around you to accept CBDCs first in terms of businesses, and then retail CBDC comes out. It's not because they care about people's privacies. They couldn't care less about your privacy, to be fairly honest. That goes for every government, to be fairly honest. But yeah, that's essentially what's happening. Hello, is there a form of censorship regarding maybe comments some people might put on different platforms? There might be. Regarding CBDCs, I know CBDCs is a very touchy subject with TikTok. If you talk about CBDCs on TikTok, straight away, they try to take you off the platform. I know that because I experienced that. Hello, Miles, and share the live. Let's go, Scott. I have former colleagues from the UK. They left the UK and France to move to Dubai, Thailand, and Philippines. Why not? Dubai is also introducing tax. I don't know if anybody's realized this. So far, it's a 9% corporate tax, and some other tax measures are being introduced in Dubai. This whole, live tax-free for life is going to slowly come to an end in Dubai as well. For a lot of people that didn't know. But this whole, live, for eternity in Dubai tax-free is somewhat of a lie. Dubai is also introducing tax laws as well. So far, as I said, 9% corporate tax is where they're at. They're introducing some other tax laws as well, but there's going to be nowhere near what other countries are charging, to be fairly honest. The 10% or 20% is some countries 40% essentially, but it's going to be nowhere near those countries, but they are introducing tax laws as well. The only country that's, for an eternity could pretty much go tax-free is Monaco. Monaco is the only place that for an eternity could go tax-free, to be fairly honest. Now, but good places though to move to. Thailand, I've never been to be fairly honest. Philippines I've never been to either as well. But Philippines does look, the beaches look absolutely incredible. So does Thailand, to be fairly honest. Now, happy Pisces, yes, yeah, definitely. They want to tax our donations to family, brother, sister, and kids. They are introducing these taxes to stop helping your family. What is this ridiculous? Even your grandparents can't help you anymore. I fully understand that. Honestly, I fully understand regarding tax laws. It's ridiculous. If you live in the UK, it's absolutely. They're going to be starting to charge people pay per mile starting next year or the year after, but pay per mile essentially is coming. Every footstep you take, they're trying to tax you in any sort of possible way. It could be you walking, you're paying a tax. It could be you driving, you're paying a tax. You go to work, you pay tax. You buy something, you pay tax. You send, essentially, you leave inheritance, you pay tax. You buy a property, you pay tax. You buy a car, you pay tax. You buy. I mean, the list just goes on. It's just tax this, tax this, tax this, tax this, tax. And then the money that you receive is just getting taxed all the way along the way, which just essentially leaves you with nothing. So I understand the argument of, it is absolutely ridiculous. And it doesn't matter which government you choose, to be fairly honest. A lot of people essentially think if they choose a different party this time around, things will change. But if you just think really, really hard to yourself, there's about, 4 to 5 parties, let's say, in the UK, and they've all pretty much done some sort of rotation of leading the country. Who's done a great job? The answer will be nobody. So the idea that essentially choosing this party next time round because this party is going to change everything, just think to yourself really, really hard. Those 4 to 5 parties inside the UK have all done some sort of rotation, either attaching themselves to another group or single-handedly winning, essentially, the UK parliament. So just think this out really hard. All of them have done some sort of rotation. Have any of them changed the UK for the better? The answer is no. So what makes you think that the second time around they're going to be changing for the better? It's just never going to happen. We need somebody that isn't a politician. The reason why politicians hate Donald Trump, the reason why every political group in America hates Donald Trump, the reason why every essentially political group outside the US might even hate Donald Trump is because he's an outsider. He's an outsider, and they don't like that because they like the rotation. They like the rotation that's been happening between them, essentially. And when someone from an outsider comes and ruins all their plans, obviously they're going to hate him and try to make him look like the crook, when it's been them that's been running the show for the longest time, and they're technically the crooks. I'm not saying Donald Trump is an angel in any sort of consideration, but you get the picture. They are crooks. Outsider comes in, ruins their plans. And they all hate him, make some people hate him also. You get the picture. But, yeah, I mean, in terms of rotation, I mean, they've all done it. So it doesn't matter which party you pick. It's the same show. It's just the main actor changes. Now, and if you're thinking to yourself, you know, what's the positive? You know, that's the negative. What's the positive? The positive is prepare yourself for a digital world. Honestly, it doesn't matter who you choose to lead your country. All of them are sitting at the same dinner table, and we're all being played. We've been played for the longest time. Every single leader you see are sitting at the same dinner table. They just doesn't look like that on the news. So just, you know, position yourself for a digital world. XRP, XLM, XDC, HBAR. It could really save your life somewhere down the road. Now, former Signature Bank executive launches a blockchain bank next. Former Signature Bank executives Scott, essentially Shea, and Jeffrey Wallace are launching next a blockchain essentially based bank focusing on digital asset payments on the Wyoming essentially SPDI charter. Former bank executives came together to create a blockchain bank in the US. Next promises enhanced transparency and security by functioning as a narrow bank, addressing essentially previous gaps left by Signature and Silvergate, the Silicon Valley banks that went completely south. Former Signature Bank executives are launching next a blockchain, essentially a new blockchain-based bank. It is structured essentially as a full reserve bank focusing on 24/7 payments for digital asset clients. Scott Shea and Jeffrey Willis essentially are key figures behind Next, introducing essentially a new banking model with no lending so far. Next is designed as a full reserve bank that does not make essentially loans. Instead, every dollar essentially of customers' deposits is to be backed entirely by cash and short-term essentially US Treasury securities, sources say. Also, Next essentially targets digital asset firms needing essentially always on US dollar essentially rails. It emphasizes transparency with daily reserves and reporting the differentiating from traditional banks. The use of full reserve model essentially addresses prior risk associated with essentially frictional reserves lendings. Industry observers also essentially suggest it could alter liquidity dynamics in digital asset sectors. And Next approach follows Signature Bank and Silvergate's previous roles in providing that 24/7 settlement essentially access. Experts indicate that Next focus on transparency could decrease depositor risk, though probability may be lower. This model aligns with the string regulatory climates for crypto banking. So, if you are somebody that's inside the US, a new blockchain bank is about to be launched called Next Bank. It's made by essentially former bank executives from the US. So it might be something you want to check out. Don't go and straight away open up an account. If they are available on the App Store or Google Store, look into them, see what they're about. And if you want to go forward, go forward. If you don't want to, stay away from them. Now, but it is essentially showing that positiveness inside the crypto space, that people from the traditional banking sector are coming together to create blockchain banks. That's quite bullish in my sense. Now, in some sense. Now, moving on from that to China. Since the day China realized that the US might be using stable coins or crypto to wipe out its debts, China has become quite hostile towards stable coins since the day they essentially found that out. And how they found that out was by Anton, who is essentially Putin's advisor. Putin's advisor, essentially Anton, came out one day on the news and said that he believes that the US is going to be using stablecoins to wipe out their debt. The next day, China decides to make an announcement that any Chinese businesses in Hong Kong in the stablecoin sector are banned from doing it. I mean, you can always tell where China essentially just wants to become number one in any way possible and take over the US dollars, realizing what Anton had to say, making that bold statement the next day. Just, it just shows the immature level they're at. But so why I'm bringing that up is because of this particular news that just came out today. Wang a former vice president of the Bank of China and the first Chinese mainland, essentially member of the SWIFT board, stated that American stablecoin legislations may destroy the very industry it aims to regulate. Interesting. A former vice president of the Bank of China, who is now the first ever board member on SWIFT, stated that stablecoin regulations will destroy the US. And it has nothing to do with, Anton coming out essentially suggesting that the US might be using stablecoins to wipe out their debt. That's why they released the Genius Act straight away. And China the next day banning Hong Kong, Chinese businesses in Hong Kong from doing stablecoin essentially maneuvers. In a lengthy analysis published essentially on WeChat, which is China's essentially main platform, Wang essentially argued that the Genius Act, signed essentially into law by President Donald Trump on July 18th, contains the seed of its own essentially undoing. The legislation it condemns will enable traditional banks to displace private stablecoin issuers by offering tokenized deposit essentially products. The Genius Act essentially establishes America's first federal framework for stablecoins, requiring essentially issuers to maintain a reserve equal to their tokens essentially and value essentially of their dollars and treasuries. The law mandates essentially monthly audits and strict anti-money laundering essentially compliances, and prohibits stablecoin issuers from paying interest to holders, among other provisions. The reason why they can't pay interest is because the big banks don't like the idea of people in stablecoins earning an extra percentage on their buck. According to Wang, the introduction of legislations in that space has not only increased demand for the US dollars and the US Treasury bonds, strengthening essentially the dollar's international status, but also brought huge profits to the Trump family and their cryptocurrency associates. So Wang is admitting in one sentence, this is why it's just so funny. I really want to understand what goes on in people's heads when they say in their first essentially opening statement, stablecoins are going to ruin the US dollars. And then 2-3 statements down, they say something on the lines of, not only essentially Wang, the introduction of legislations in that space regarding the Genius Act, not only increased demand for the US dollars and US Treasury bonds, but strengthened the dollar's international status. In his first opening statement, he said Genius Act is ruining stablecoins. Essentially, the Genius Act is ruining America's US dollars. 4 or 5 sentences down, he's saying this Genius Act is actually helping to strengthen the US dollars. However, he also stated that this brings new challenges to the global monitoring of dollar circulation and the stability of traditional US financial systems. One of these challenges, according to Wang, is the threat of legislations itself to other jurisdictions. He wrote, the trading and transfer of crypto assets backed by dollar-denominated stablecoins has become a new and more difficult to prevent tool for the US to harvest global wealth, positioning essentially a serious threat to the monetary sovereignty and wealth security of other countries. Wang also wrote about the potential of legislations backfiring on stablecoins and their issuers. Once crypto assets receive legislative regulations and compliance protections, banks and other financial institutions will undoubtedly essentially participate fully. He also wrote, while also essentially mentioning that payment institutions such as banks can directly promote the on-chain operations of fiat currency deposit tokenization, completely replacing stablecoins as a new channel and a hub connecting the crypto world and the real world. Essentially saying that banks are going to go to essentially the idea of tokenized deposits and move away from stablecoins, but people are still going to be using stablecoins. Institutions are still going to be using stablecoins. The idea that also that some of these stablecoin, essentially US dollar stablecoins, are not American-based, which is true. Tether being one of the biggest, it's not an American essentially based institution in any sort of a way. Based in essentially, if I'm not mistaken, it was El Salvador essentially is where essentially their hub is right now. But put that to one side. This is why I said a few weeks ago or months ago that American US dollars essentially is going to be American backed. In other words, Ripple and Circle will be the ones leading in that category because they're both American. Ripple also has the compliance for it as well, whereas Tether doesn't really have the foothold that Ripple essentially will have in terms of RLUSD or Circle has in USDC. The US is not going to let a foreign company be the backbone of the US dollars. It's just never going to happen, ever. If anybody thinks to themselves, even for a second, that the US is going to let Tether be the main, essentially, person running the show for the US dollars in a digital world, it's just never going to happen because Tether is not an American, which means the US can't control it. So, never going to happen. Tether's days will be numbered when they start realizing that. And Tether will most likely be used by criminals somewhere down the line because it won't be utilized by the US somewhere down the line either. Because the UK is not even in favor of Tether either. The same way Tether USDT got banned from the EU, the same way the UK is thinking maybe USDT isn't the best fit for us. The same way Canada essentially banned USDT for a while as well. And again, thinking about, yeah, it's definitely not a good fit for us. The same way the US is going to go, nope, USDT is not really where we want essentially our bet to be on. Because it's not American. If you just use basic common sense, you realize essentially when you come to that conclusion of the US is never going to let a foreign authority essentially be the printer of the US dollars in a digital world. It's just never going to happen. Now, so the crypto, so I understand where Wang is coming from when they essentially talks about that perspective that, you know, there's too much US dollar printing going on. It's not really backed by America, but it is backed by essentially US dollars and backed by US bonds. Fair enough. But America's not in control of it. So the crypto companies that essentially, and I know the Fed essentially is a private entity as well, and it's not really controlled by the US, but let's just all be honest with ourselves, it is. Now, so the crypto companies that Act was essentially was created to protect may now suffer or struggle to compete essentially with traditional institutions that are more essentially empowered to take advantage of the legislation, according to Wang. In his analysis, Wang also explained why China has chosen to ban stablecoins rather than to essentially compete with the dollar, essentially USD, essentially tokens. Wang pointed out that with American essentially firms already controlling over 99% of the global stablecoin market, essentially making the development of the RMB stablecoin, which essentially follows the path of the US dollar stablecoins, not only fail to challenge the international status of the US dollars and stablecoins, but may also essentially even turn the RMB stablecoin into a vessel for US dollar stablecoins. More troubling for Beijing, essentially, is stablecoins enable 24-hour global trading beyond traditional oversight mechanisms. Wang stated that while this essentially significantly improves efficiency, the highly anonymous and high-frequency global flow, lacking coordinated essentially international oversight, makes it difficult to meet regulatory requirements such as KYC, AML, FTC. He also essentially mentioned that it poses a clear risk and has been demonstrated in real-world cases being used for money laundering, fundraising frauds, and illegal cross-border fund transfers. Just want to say one thing regarding what Wang had to say regarding China isn't entering the fields because they can't compete, and that's why they banned essentially, you know, stablecoins. I mean, I'll be honest, the timeline was quite funny. Anton, Russia's essentially Putin's advisor, comes out on live Russian news. We think the US is using stablecoins to wipe out their national debt. The next day, China bans CBDC. Essentially, the next day, China bans stablecoins, and any stablecoin, essentially, Chinese firms in Hong Kong, is a bit of an odd coincidence, I would have to say. But now, you know, Wang coming out and saying, no, it wasn't because of that. It was because China essentially can't compete with the US dollars. That's why they decided to ban them. So why didn't they ban them before? Why did they have to ban them straight after Anton makes that speech? That was a bit odd. The United States has already demonstrated its ability to freeze crypto assets accounts and essentially prosecute platform operators. He noted while China would lack equivalent leverage over dollar-essentially dominated systems, China should prioritize national security and exercise high vigilance and strict controls over the trading, essentially, and speculation of crypto assets, including stablecoins. Wang wrote, rather than essentially simply pursuing essentially increased efficiency and reduced costs. Yet Wang's warning about banks displacing private issuers finds support beyond China. Christian Lagarde, the European Central Bank essentially president, has also called for the strengthening of the euros, which is true. The European Central Bank, Christian Lagarde, essentially president, has came out multiple times and said, we are competing again against the US dollars, and that the euros, essentially stablecoins, need to get strengthened. You see, it's so funny that in a fiat world, the US dollars is the #1 dominated currency. And people will tell you, it could be huge influencers, crypto influencers, CIOs, CEOs, board members, executive board members from any company around the world. And they all come out and essentially, even Robert today coming out, making that tweet, the US dollars is going to zero, everybody run away from it, is what's been suggested. It's what's been suggested for the longest time inside the crypto space. The US dollars is going to go to zero. But then if you really think about it, even what Wang is saying, essentially 99% of the crypto market space in terms of stable coins is run by the US dollars. So in a fiat world, the US dollars is #1. In a digital world, the US dollars is #1. For the digital US dollars to exist, fiat US dollars needs to exist, because fiat US dollars is also backing the 99% US dollar stablecoins running the show. Not all of it. Some of it is backed by US bonds, US treasuries, gold, but some of it is also being backed by fiat US dollars. And the more printing that happens in terms of digital US dollars, more fiat US dollars is needed for it to survive. So how's it going to zero? It's a very crucial factor they're essentially leaving behind, and a lot of people don't talk about this inside the crypto space. If you go to Ripple's website, go to Tether's website, go to Circle's website, and see what's backing their stablecoins, you'll get the big picture. And regarding what Christian Lagarde had to say, the president of the European Central Bank, that the euro needs to essentially compete inside the digital, essentially stablecoin space, I get it. But I'll be very essentially, the best way to put it is you've already lost. The euros has already lost, the pounds has already lost, the Chinese yen has already lost. Every currency has already lost to the dollars again in a digital world. They lost it in fiat, they're about to lose it in digital dollars, essentially in digital sense, and stable coins. Now, moving on, essentially what essentially Wang had to say regarding the market space. And let's just want to share one more thing with you regarding his closing statement. The legislation was more about prioritizing America and maximizing American and even group interest. In other words, the Genius Act was all about boosting America's US dollars. Wang wrote, at the expense of the interest of other countries and the common interest of the world. In other words, America played every country by essentially pushing the Genius Act through, making this US dollar stablecoin even strengthen further, which strengthens the fiat US dollars. So is the US dollars going to zero? No. Now, everybody got played. Seattle is what we're going to talk about next. And I said this 2 years ago, 1 year ago, I said it as well, that it just doesn't make any sense, because how could it go to zero when it's been backed by that? So moving away from what Wang had to say to essentially Seattle. Seattle has came forward essentially and urged a strict SEC rules on DeFi tokenizations. Seattle Securities has submitted a detailed comment on the SEC, essentially urging strict regulations on DeFi protocols and trading tokenized US equities, and sharp essential responses from crypto trading industry leaders are coming forward. This event highlights a potential clash over tokenization control on essentially sorry about that, everyone. So, Seattle Securities essentially has filed a letter urging the SEC to impose strict regulations on DeFi protocols and trading tokenized US equities. Essentially, this request signals a potential battle over the control of tokenization between Wall Street and DeFi. The financial firm, essentially led by Ken Griffin, seeks to classify DeFi protocols, and the move, essentially seen as an anti-DeFi, has sparked criticism from industry figures and DeFi essentially prominence such as Uniswap, Hayden Adams, and reactions from the crypto community suggest concerns about essentially potential impacts on innovation. The focus is on how this might change essentially market dynamics for DeFi-related assets that rely on permissionless essentially trading, and the proposed also essentially traditional financial safeguards, potentially discouraging some market participants, impacting essentially DeFi ecosystem growth and leading to essentially a shift in market structures. The debate underscores a broader struggle between traditional finance and emerging DeFi sectors. The push for regulations also raises questions regarding the future of decentralized trading platforms and the integration of these systems within established legal frameworks. Historical precedents also suggest that regulatory essentially interventions heavily impact the governance tokens and DeFi projects. The proposed measures also aim to prevent essentially traditional financial frameworks, which could also lead to essentially intermediate regulatory compliant approaches to equity tokenization. So this is essentially what's being suggested by Seattle regarding restricting regarding essentially DeFi space, restricting DeFi space. The idea of DeFi is supposed to be open source, not closed source. However, the institutions want some sort of reassurance that, DeFi isn't going to be, the Wild West. And so far, it is the Wild West. There's no regulations pretty much for the DeFi space because it's difficult to control it. However, apparently institutions want essentially the DeFi space to be controlled up to a certain extent. The DeFi developers, not so happy about it in any sort of a way. I just want to point out one thing. The idea of living in a fully decentralized world was never going to be possible. As much as, your favorite crypto influencers or CEOs or board members, whoever it may be, will tell you and tweet out on X and say, decentralization is what's happening and so on. The world is going to be open source and free. It's just not the reality of it. We live in a very restricted world. In a essentially decentralized world, elements of centralization will always exist. Up to a certain extent, elements of centralization will always exist. They're never going to let us go free in any sort of a way. Also, Kevin's closing statements. Kevin Griffin, the founder of Seattle Securities, says DeFi protocols matching trades in tokenized US equities should be treated essentially as a full exchange or broker dealers. Said essentially Seattle essentially challenges DeFi frameworks in an SEC letter provoking response. They want essentially the SEC to crack down on the DeFi space. Bad idea is what I would have to say. The last time somebody did that, they lost their jobs as the head of the SEC. Now, moving on from that to Coinbase, and I also want to apologize for that, whatever happened essentially for a second there. I received a phone call because I'm obviously using my iPhone to essentially do this live show, and I received a phone call, so sorry about that, everyone. For my business partner as well, I ended the call straight away. Now, Coinbase CEO is all going to talk about next on tonight's live. So moving away from Seattle, suggesting that the DeFi space should essentially be heavily restricted up to a certain extent, to Coinbase CEO predicting essentially tokenization to transform finance. Coinbase CEO Brian Armstrong recently declared essentially at a cryptocurrency event that tokenization is poised to revolutionize the financial sector, signifying a strategic push towards on-chain assets and integrations. Armstrong also emphasized on tokenization highlights its potential to reshape financial systems, attracting essentially institutional interest and signaling a shift towards more transparent and sustainable capital essentially markets. The CEO of Coinbase emphasized that tokenization will reshape how we see finance today, and Coinbase is intensifying essentially efforts around on-chain assets, reinforcing its role as a key infrastructure provider. And Armstrong essentially advocates bringing real-world assets on-chain to modernize essentially capital formations and expand the use of digital assets. The anticipated essential impact of tokenizations extends across financial institutions and markets, essentially driving increased exploration of digital finance mechanisms. And this shift also involves significant industry collaborations with traditional essentially players moving towards essentially blockchain-based solutions. Armstrong's ongoing dialogue essentially with regulators focus on clarifying digital asset regulations and seen as pivotal for market growth. Tokenized finance promises enhanced efficiency, security, and accessibility, reflecting broader industry formations moving forward. It is essentially, tokenization is definitely revolutionizing how we might see things around us, especially going 2026 to 2027. Everything around you will become definitely tokenized. So I fully understand where he's coming from, and it is definitely going to revolutionize the financial sector. Now, moving on, essentially from what he had to say, from Brian Armstrong had to say, to Japan. The Japanese market space is now being seen as the next catalyst for the crypto market space as well. Another push for the market space, which is something essentially Happy Pisces was talking about yesterday's live show as well. And essentially, let me tell you what I mean. Japan's $110 billion stimulus essentially package. Japan recently rolled out a massive $17 trillion yen, which is equivalent to $110 billion, economic stimulus package aimed at boosting domestic demand, easing essentially inflation pressures, and strengthening long-term economic stability. The plan essentially includes subsidizing tax breaks, household supports, and corporate incentives, all designed to stimulate spending and revive momentum in one of the world's largest economies. Global markets are watching closely, and so is the crypto sector. Large-scale essentially stimulus programs often inject liquidity into financial systems, shift essentially investor behavior, and influence risk appetite. With Bitcoin and other cryptocurrencies increasingly seen essentially as macro-sensitive assets, many analysts are now asking whether Japan's bold physical essentially move could become an unexpected catalyst for the next major Bitcoin surge. Monetary stimulus essentially programs such as government spending packages or central bank liquidity injections often boost the price of risk assets by increasing the amount of capital available for investment. When essentially the central bank lowers interest rates or governments inject cash into the economy, investors tend to seek higher yielding assets from equities to commodities and increasingly essentially cryptocurrencies. This risk-on environment creates an upward pressure on asset prices as investors deploy excess essentially liquidity into assets with potentially higher yielding returns. And historically, large packages from the Japanese market space boosting essentially the market space has happened. I mean, the US has done it as well. So, for example, large stimulus cycles have had measurable effects on the market space before. For example, during the US Federal Reserve post-2008 quantitative essentially easing programs, equity surged as liquidity flooded the systems. Also, the European Central Bank stimulus efforts back in 2015 to 2016 similarly essentially also boosted the market space as well. In Japan, the Bank of Japan's ongoing monetary easing programs over the past decades have helped stabilize domestic markets while supporting essentially riskier assets and classes. Cryptocurrencies often behave as essentially high beta macro assets, meaning they experience amplified price movements in responses to broader economic conditions. When stimulus packages also essentially increase liquidity and investor essentially confidence, Bitcoin and other digital assets frequently see accelerated gains inside the market space as well. Interconnected channels essentially creating both direct and indirect effects on the crypto market space. The injection of this fund increases available essentially capital in the economy, and investors looking for higher returns may allocate a portion of their cryptocurrencies, essentially of their investments, into cryptocurrencies. This surge in demand can elevate Bitcoin trading volume and support price growth, particularly in the short term as liquidity enters the crypto market space. So Japan is about to inject the market space with 110 billion essentially dollars, which is equivalent to 17 essentially trillion yen. That is a hefty amount that's going to be essentially entering the crypto or entering essentially the market space, injecting the Japanese market space, reflected essentially on riskier assets, which tends to be crypto. That's positive news and extremely bullish news. Now, moving on essentially from the Japanese market space getting ready to inject the market space with money to XRP news. Before we talk about the XRP news, let's go inside the comment section first. Let's see what's happening there, and then we'll go straight into the XRP news. There's two XRP news I want to share with you today. But before we do that, let's go inside the comment section first. Let's see what's happening there. I have former colleagues from the we're here. Yeah, it is better to have 50 pair of our USD and 50 pairs of XRP in our portfolios, or do you think strictly you should have more XRP than our USD? Okay, Carl, I think, okay, RLUSD is just a equivalent of US dollars. So if you want to have US dollars, you can have RLUSD. XRP is different to RLUSD. XRP essentially, it plays a role of an intermediate essentially between transactions. So, and it's obviously the main token of the XRP ledger. XRP is what you want to go for in terms of an asset that you want to hold on the sidelines, build a foundation, and let it grow. RLUSD is equivalent of US dollars. If you want to have a stable coin, RLUSD is obviously very safe. So in a sense of having equivalent amounts of RLUSD and XRP, it doesn't make sense unless you want to have essentially some sort of cash flow and some sort of essentially assets on the side. But the idea of comparing both of them together makes no sense either, because one's a stable coin, one's not a stable coin. So you don't need to have 50, of that, 50% of that, 50% of that, because they're two different things. XRP is an asset that will grow in value, whereas RLUSD will always stay at $1. Unless you want stable coins, then RLUSD, why not? You're frozen. Okay, now you're back. Yep, lol. The XRP group is going to be having some interesting conversations soon. XRP is moving slowly but steady. It's going to be a fun ride. I do agree, yes. Like and repost, guys. Let's go facts, Joe. Go to the site and check out the rankings of your bags. Let's go. If you have considered anything Miles has said essentially over the last 3 years, then you probably, or at least in the top 4% of holders, seriously, not including institutions. Let's go, Scott. Now, XRP. XRP, essentially on the topic of RLUSD, and essentially XRP. XRP spot ETF inflows approach $1 billion milestone. The US spot XRP ETFs are nearing $1 billion in inflows as major asset managers and Ripple executives drive attention to the market opportunity. Strong institutional essentially interest in XRP ETFs indicates growing confidence in regulated crypto products, potentially essentially reshaping asset flows and volatility across the cryptocurrency markets. XRP spot ETFs in the US have attracted nearly $1 billion, marking a significant essential adoption of these financial instruments, and institutional interest is essentially a driving factor, with Ripple's leadership highlighting crypto's early role in essentially global ETF markets. Entities like Ripple, Canary, Bitwise, and Franklin Templeton are central to these developments. As ETFs accumulate XRP, they signal a structural shift towards compliant institutional access to cryptocurrencies. Even though the markets are not doing too good, XRP ETF inflows are still happening. Financial implications include shifts from BTC and ETH assets to XRP. Driven by these ETFs, institutional adoption is underpinned by the potential for regulated growth, though essentially volatility persists due to market uncertainties. Following the launch of XRP ETFs, the market has seen a rotation of investors' interest as funds shift. Essentially, XRP shares and institutional portfolios expand, hinting at a broader acceptance of XRP-related assets. What's being suggested right now is that essentially there's a shift happening of outflows happening from Ethereum ETFs and Bitcoin ETFs going into XRP ETFs. Suggests essentially a historical precedence for essentially BTC and ETH ETFs suggests initial inflows encourage price stability while maintaining volatility. Experts see regulated financial products as catalysts for expanding XRP's market size, influenced by Ripple's infrastructure and developments, as Brad, the CEO of Ripple, had to say. The XRP ETF inflow data is evidence that institutional adoption of XRP and crypto ETFs more broadly is only at an early stage of relevant to the size of traditional capital markets. Also, on top of what Brad had to say regarding essentially XRP taking some sort of a crown now for essentially ETF inflows compared to the rest in markets like this, Franklin Templeton also had essentially this to say: XRP is entering its institutional breakout phase. This is what Franklin Templeton had to say about XRP's ETF essentially footsteps. Newly launched XRP essentially ETFs are drawing stronger than essentially expected investors. Demand from both institutional and retail investors, according to several fund managers who entered the markets in recent weeks. The early performance has led some on Wall Street to reassess XRP's position in the broader digital asset landscape. Sandy, the head of digital assets and industry advisor services at Franklin Templeton, said the shift is a part of a larger trend in which professional money managers are exploring alternatives beyond Bitcoin and Ethereum. I just want to say this one more time. This is Franklin Templeton, coming out and saying essentially, and they're not the only ones coming out and saying and backing what Ripple's CEO had to say, that people are shifting from Bitcoin and Ethereum ETFs, and they're going into alternative, which is XRP. Franklin Templeton is saying this. If I said to you, Brad is saying this, people who support Ripple will understand what Brad is saying is genuine, and people who hate XRP would say, no, Brad is just lying through his teeth. But now Franklin Templeton is saying this. What, Franklin Templeton is also lying, like Ripple's CEO? Sandy, the head of digital assets at Industry Advisors from Franklin Templeton, essentially said the shift is a part of a larger trend in which professional money managers are exploring alternatives beyond Bitcoin Ethereum. I think we're moving into that direction now. Sandy also said, saying that the data is coming in from ETF issuers, and it's very encouraging. The data is coming in, and it's very encouraging that people are moving away from Bitcoin and Ethereum ETFs and shifting to an alternative, XRP ETF. On essentially Paul Barron's podcast, Sandy essentially also said that inflow is essentially a major unique positioning in the stablecoin markets. It's a very interesting story, essentially. This is what Sandy had to say. So Sandy said XRP's growing appeal isn't just about ETF inflows. A major factor, she explained, is the chain unique positioning in a stablecoin market space. There's a very interesting story playing out around stablecoins, she said, and XRP is one of the only chains that has its own stablecoin that adds a new element to what they might essentially be able to build around on chain. Franklin Templeton has just given everybody a hint that they're seeing XRP Ledger as their backbone. She pointed out that there is more people becoming comfortable with Web3 models as well. The number of automated and essentially computer-driven transactions is expected to surge. Networks can support faster, lower-cost, high-volume transfers paired with their own stablecoins are also well-positioned to capture the activity. This starts to become a compelling business case. Sandy said that Ripple, the company closely associated with XRP, continued to expand aggressively outside the United States, even during the lengthy court battle with the US SEC. While regulatory uncertainty slowed the progress domestically, Ripple didn't give up and went international. We've been engaged with them in Asia for some time, she said. Now we're seeing that spread to more regions of the world. Institutional confidence builds as ETFs essentially interest grows and Ripple's global footprint widens. Sandy believes, from Franklin Templeton, XRP is gradually moving towards the level of institutional legitimacy. Franklin Templeton came out and said that XRP is moving into the level of institutional legitimacy. Franklin Templeton has never said that about any other crypto asset, including Bitcoin, Ethereum, Solana, the list just goes on. But now Franklin Templeton is coming out and saying XRP is moving into the level of essentially institutional legitimacy, already established. Essentially. Now, we're also seeing the early signs, she said, adding essentially that Franklin Templeton expects to deepen its partnership with Ripple as adoption starts to broaden. So one, essentially there's outflows happening in terms of Bitcoin and Ethereum. Not a lot tremendous, but there are some outflows happening. Some of that outflow goes with XRP ETFs. In the market downtrend that we're having right now, XRP ETFs are doing some sort of a milestone, reaching $1 billion. Franklin Templeton sees XRP as some sort of a key financial legitimacy player. And also regarding that, they're seeing essentially that there is an interesting story being played out, and that XRP could be the foundation of what Franklin Templeton has in stock next, in other words, of expanding inside the crypto sector. So, on that note of XRP is leading, as usual, inside the financial sector, because it's all about legitimacy in terms of essentially regulations, licensing. That's all that matters. Going into a regulated world in terms of cryptocurrencies, all that matters is essentially licensing. Licensings and how much essentially partnerships and contracts you've done, how much NDAs have you done, how much MOUs have you done, LOUs have you done, and the list just goes on. On that note, we have reached the endings of tonight's live. This was the CMF live show. Stands for Crypto Mouse Family. My name is Miles. You can tune to this live Monday to Friday, 10 p.m. long time onwards, which means the next episode of the CMF live show is going to be on Monday. This was episode 415, and the disclaimer of this live show, as always, is no financial advice, no political advice, and whatever I say is only for entertainment purposes. Everybody have an amazing weekend. Before we do go, obviously, let's start the comment section first. And by the way, thank you so much to everybody who smashed the like buttons and the retweet buttons. If you haven't, smash the like buttons and smash the retweet buttons, CMF members. If you watch us on YouTube, smash the like button and put comments outside the live as well. If you followed and subscribed to me during this live show, thank you so much and welcome to CMF. Let's see where we're at. Thanks for acknowledging, essentially, Maus. We know that the US or Japan will not take the blame for the stock market crashing, gold, etc., including crypto. So there'll be some sort of crazy oil spikes due to something happen to the Middle East, which will force Japan to raise the rates even quicker and higher than is happening now. The blame oil and not the fact that essentially these globalists have been borrowing from 0% for about 20 years, pretty much. Facts. There is a good group. I have essentially learned a lot. Miles essentially is our members love and support one another. We will financially successful together. Absolute facts. Let's go, Scott. Share the live. Let's go, Scott. Good night, Miles, and great job again, my friend. I look forward to getting your reply. Your opinion counts in this matter. I shared with you in previous messages for no reason. I can't find your Telegram. Okay, Carl, I'll send you my Telegram after the live show ends. No problem. On X, I'll send it to you on your message. Good night, Miles, and all the CMF. Thank you for great live and news. Have a great weekend. Let's go, JP. Have a great weekend as well, brother. See you same time as usual on Monday. Good night, Miles. Thanks for all you do to bring the great news. See you on Monday. Free if ever, see you on Monday as well. Thank you, Miles. Have a great weekend. Oh, let's go, Stormy. See you on Monday as well. Have a great weekend as well. Thanks, Miles. Have a great weekend and see you on Monday, same time. Otter 6, see you on Monday, same time as usual as well. Night, Miles. Amazing show as always. Have a great weekend, CMF. Let's go, Joe. See you on Monday, same time as usual. Just joined. Night, Miles. Amazing. Just joined now. We'll watch the live tomorrow morning as usual. Good night, Miles and CMF. Talk. Let's go. See you on Monday, same time as usual. XRP, XDC, XLM, H1 hot. Let's go, Scott. All great projects. Thank you, Miles. See you on Monday. See you on Monday, brother Mike. And Callie, good night, Miles, and have a nice weekend. Thanks. Let's go, Callie. See you on Monday, same time as usual as well. Scott, see you Monday, same time as usual as well, brother. I will see everybody on Monday, same timing as usual, 10 p.m. London time onwards for the next episode of the CMF Live, which is episode 416 on Monday. See you on Monday, same time as usual. Everybody have a great weekend wherever you are around the world, CMF members. When time permits, please remember my dear Mouse. Yes, definitely Scott. And Carl's essentially DM as well. I'll see everybody on Monday, same time as usual. Everybody have a great weekend wherever you are around the world, CMF members. Like, comment, follow, subscribe if you already haven't. If you have, thank you so much. See you on Monday, same time as usual for episode 416 at 10 p.m. on Monday. Thanks for all you do for our group. Let's go, Scott. Have a great weekend. YouTube, brother. Everyone have a great weekend. See you on Monday.